Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Apple report for Wednesday, November 16th, 2022. Let's take a look at the charts. We came very close to testing this descending two-thirds speed line again on Tuesday, and having come close, probably an equal distance. You know, sometimes, and I haven't done this, but if you draw a parallel line off of this high, by the degree to which it missed it a few weeks ago, it's also a resistance level in its own right. But you know, I don't like to bunch up these resistance levels and have them so tight they sort of lose their meaning if you've got a whole series of, you know, support and resistance levels that are 50 cents to $1 apart, right? So I try to pick those that have the most meaning, and I think that sort of results in decent day trade structure and also structure over the longer term time horizons. But the point I'm making here is once again the 153.83 descending two-thirds speed line that we almost tested a few weeks ago and came very close to testing on Tuesday, able to contain buying through December, and from here we can fall back not only into the low 140s again by the end of next week, but even into the upper 110s to lower 120s as we move into December trade. And I'll get to that in a moment, but I'm going to stick with this chart just to show, you know, the levels for today. Just so you know, a wickedstocks.com membership delivers regular daily video analysis in the SPY and Triple Q, weekly video analysis in the S&P 500 index, the NASDAQ 100 index, and a U.S. Treasury ETF, and 2 individual stock pick videos every week. Check out our other content by clicking the link below. I've got 148.56, just a minor point that is actually Tuesday's low. It has pivot point qualities in itself, but just below that, a couple of points lower, is our new downside 3/8 Fibonacci, following the early November low against Tuesday's high, 146 1/4, 3/8 back. And that can, 146 1/4, contain session weakness. But having come off of this level, I'm not quite sure if we can expect a bounce here into later week back to 153.85 or 83. We may. I came very close to calling this a mere intraday support level, but I think the market is a decent enough distance away from 146 1/4 that it may grow exhausted within the day, for the day itself, at 146 1/4. I will say this, that if we break 146 1/4, it could get pretty ugly by the closing bell, fall all the way back into the lower 140s, 141.85 to 142.67, 141.85, this former short-term rising channel top, and 142.67 is the high of the low that was placed in early November. So this area, if tested today, and I don't see that, I think what could happen is we close below 146 1/4 and we test the low 140s tomorrow, Thursday, 141.85 to 142.67, able to contain selling into early next week, and we could fill this wedge out between 141.85 and 153.83 for the next week or two. But this area, the low 140s, is weaker by far than the 153.83 area is in terms of its meaningful strength, in terms of its ability to contain longer-term buying pressures. And so, as I say, holding below 153.83, and let me go to that chart. I think I have it somewhere. Here it is. Yeah. So I've got a lot going on here with this chart, but holding below 153.83, this is a daily chart, does allow the 124.40 level. That's on the daily chart. And I've got 125.59 down here. I'm not quite sure what that is. It's probably on the weekly chart. Does allow 124.40 by the end of December. The answer to that is yes, if we close over the next few days back below the low 140s, 141.85, and then we're 2 to 3 weeks away from falling to 124.40. This long-term channel bottom also found on the weekly chart, and that is here. The 1748 to 124.37 area. So this zone can contain selling through Q1 if tested. I'm just putting this, I know we're so far off from this right now, and I know it's kind of ridiculous to look at it, but I do like to paint the big picture too. And really this is well suited for options traders, for going short here in the low 150s. This, by the way, yesterday's near miss of 153.83 was a put buying opportunity in the 120s. the 124.40 formation. So 125 out of the money puts that don't expire for at least, I'd say, a January expiration at the soonest, more like a March expiration, because, you've got a lot of time decay that accelerates as we move into December with regard to those January options. And if you go March, you're spending a little bit more money, but you're less susceptible to the time decay element or theta. So your delta holds with the farther out of the money put options, obviously. So you buy the 125 March puts, let's say, and just set it and forget it, as long as we're below 153.83. So that kind of covers the downside, I think. Now, upside, it really is a range. So even if we close above 153.83, I'm not comfortable going long. I think you could consider liquidating those 125 puts if those were acquired, let's say, over the last day or so. You could liquidate a short position above 153.83. But in terms of going long aggressively into December, that would be recommended if we close today above 157.51. So this is a big, I call them range pivots, below which the mid 120s in reach over the next 5 to 8 weeks or less, and above which, closing above 157.51, I see a 3 to 5 week buy signal up to 179.64 that over the next few months coincides with this 182.94 all-time high from earlier in the year. So closing above 157.51, we have a meaningful buy signal. There, once again, you could consider buying 180 calls that don't expire until January. January 180 calls. I think that would be a decent play. You could go a little further out just in case it takes a little longer to reach it than 3 to 5 weeks. It could take a couple of months depending on other circumstances, but this would be the objective if we close above 157.51. I think I've said enough for today. Please click like and subscribe if you haven't already. Helps us out a great deal with the YouTube presence. And share the content, if you would, with friends and colleagues. That's all I've got for what is today, Wednesday's Daily Apple Report. I'll be back tomorrow with Thursdays, and you have a great day.